Did you know that if you had invested just $100 into Bitcoin back in 2010, your investment could have peaked at a value of over $60 million? That's not a typo. That is the kind of once-in-a-generation wealth creation. It turned Bitcoin from an obscure digital experiment into a global financial phenomenon. Institutions, governments, everyday investors. It's a force that has redefined our understanding of money, ownership, value in the digital age. Forget everything you thought you knew about traditional assets. Bitcoin doesn't play by those rules, and that makes it so incredibly compelling. And for some, incredibly profitable. I want to give you something for free. Seriously, it's called the 5 Pillars of a $1 Million Crypto Portfolio. All you have to do is subscribe to the newsletter using the link in the description below. It takes 5 seconds, and it could be the most valuable financial decision you make all year. It's a protocol, a network, and a monetary revolution. Remember this foundational idea: price fluctuations are just one part of a much larger story, a story about the changing nature of money itself. What is happening with Bitcoin right now will impact the future of finance for everyone, and staying informed is your best strategy. Whether you are a seasoned investor or just starting to get curious about cryptocurrency. Alright, let's get down to the numbers, because that's what everyone wants to know first. As of today, September 4th, 2025, Bitcoin is trading at approximately $132,500. It has been a roller coaster of a year. We saw a powerful rally in the first quarter, pushing past late 2024 highs, and touching the psychologically important $150,000 mark. This surge was largely fueled by renewed institutional interest. Approval of several new spot Bitcoin ETFs in major Asian markets followed. That opened the floodgates for a new wave of capital. The market couldn't sustain that momentum and has entered a consolidation phase. Bitcoin's been trading between $120,000 and $140,000 for weeks. This consolidation is actually healthy for the market. Think of it like a marathon runner pausing for a water break. Sideways action shakes out short-term speculators and builds a stronger foundation. On-chain data confirms long-term holders are accumulating. Tourist investors who bought at the top have largely sold off. Transfer from weak hands to strong hands is a classic bullish indicator. From a technical perspective, we're watching key levels closely. Major support looks established around $118,000. On the upside, the resistance to break is the $150,000 ceiling. A move above could trigger FOMO, potentially sending price toward $175,000 to $200,000 quickly. For long-term believers, this sideways action is an opportunity for dollar-cost averaging. Smart money accumulates during quieter consolidation periods. It's less exciting, but it's how sustainable wealth is built. Now for the really exciting part, price predictions. Where do the experts, the big banks, the seasoned analysts believe Bitcoin is headed? The consensus is overwhelmingly bullish, though the timelines and targets vary. Analysts at major investment banks like Goldman Sachs and JP Morgan, who were once staunch critics, have recently updated their long-term forecasts, citing sustained institutional demand, Bitcoin's emerging role as a digital gold, a portfolio diversifier. Many of their models now place a 2026 year-end target in the range of $200,000 to $250,000 per coin. On the more bullish end of the spectrum, you have figures like Cathie Wood of Arca Invest. Her firm has consistently been one of the most vocal and optimistic proponents of Bitcoin. Their latest research models factor in global adoption curves, institutional allocation percentages, network growth, and project a much more explosive future. ARK Invest's base case scenario now points to over $500,000 by 2030, with their bull case scenario reaching an astonishing $100.5 million per Bitcoin. They argue that as Bitcoin captures just a small percentage of global asset classes like gold, real estate, and bonds, its market capitalization is destined to swell into the multiple trillions of dollars. Of course, it's crucial to approach these predictions with a healthy dose of skepticism and understand the assumptions behind them. These forecasts are not guarantees, they are models based on current data and future expectations. A negative regulatory event, a major security flaw, or a global macroeconomic downturn could certainly delay or alter these trajectories. This is why it is so important not to invest more than you are willing to lose, and to maintain a diversified portfolio that isn't solely dependent on one asset's performance. Ultimately, the value of these predictions isn't in their precise accuracy, but in the trend they represent. The overwhelming direction pointed to by a diverse range of financial experts is up. The conversation has shifted from if Bitcoin will be a significant global asset to when and how large it will become. One of the biggest stories of the past year has been the dramatic shift in the global regulatory landscape for Bitcoin. For years, governments were playing catch-up, unsure how to classify or control this new digital asset. However, 2025 has been the year of clarity, for better or worse. In the United States, the most significant development has been the passing of the Digital Asset Clarity Framework. This landmark legislation finally provides clear guidelines for exchanges, custodians, investors. It officially classifies Bitcoin as a commodity, placing it under the primary jurisdiction of the Commodity Futures Trading Commission, or CFTC. This has removed a huge cloud of uncertainty that had been hanging over the market for years. This new clarity in the US has had a massive ripple effect globally. By providing a clear rulebook, it has given large, conservative institutions the confidence they needed to enter the market more aggressively. Pension funds, insurance companies, corporate treasuries. For example, they can now use regulated and insured custodians with the full backing of US law, which is a game changer for fiduciaries responsible for managing other people's money. This legislation, while not perfect, is being seen as a major de-risking event for the entire asset class, legitimizing it in the eyes of Wall Street. Not all regulatory news has been positive, however. We've seen a continued divergence in approaches internationally. United Arab Emirates, Switzerland, India, for instance, implemented a high transaction tax on crypto gains, which has stifled trading volume within its borders, even though it stopped short of an outright ban. China continues to enforce its strict prohibition on all cryptocurrency activities. This creates a complex and fragmented global market where innovation and capital tend to flow to the regions with the most favorable and clear regulations, a trend we expect to continue. For the average investor, this evolving regulatory environment is a double-edged sword. On one hand, clear rules and investor protections are essential for the long-term health and mainstream adoption of Bitcoin. On the other hand, regulation can sometimes stifle innovation or impose reporting requirements that feel intrusive to early adopters who valued Bitcoin for its privacy-centric ethos. The key takeaway is that regulation is no longer a hypothetical threat. It is an active and present force shaping the market. Staying informed about these legal developments is just as important as tracking the price. Beyond the price charts and government circulars, the most tangible evidence of Bitcoin's success is its growing integration into the real world. In 2025, Bitcoin adoption is no longer a niche phenomenon. It's a strategic imperative for some of the world's biggest companies. We have moved far beyond the early days of just a few tech companies holding it on their balance sheets. Now, major payment processors have fully integrated Bitcoin payments into their networks. For example, PayPal, Block, formerly Square. Millions of online merchants accepting Bitcoin via app checkout. Transactions instantly settled in fiat for merchants. This seamless integration removes the friction that once made using Bitcoin for daily purchases impractical. This trend extends into luxury goods and high-value transactions. Real estate agencies advertising Bitcoin, Miami. Real estate agencies advertising Bitcoin, Dubai. Multi-million-dollar homes sold in Bitcoin. Commercial properties transacted in Bitcoin. Sotheby's accepting crypto. Christie's accepting crypto. Luxury car brands offering direct crypto payment gateways. This isn't just a marketing gimmick. It's a practical response to a new class of wealthy investors transacting directly with digital assets. Perhaps the most significant adoption case has been in financial services. BlackRock, Fidelity, firms launching spot Bitcoin ETFs. Firms offering direct Bitcoin exposure to high-net-worth private clients. This is a monumental step. A firm managing trillions telling its wealthiest clients Bitcoin is viable sends a powerful market signal. Bitcoin normalized alongside traditional assets, stocks, bonds, real estate. This is a massive psychological and financial endorsement. Corporate and institutional adoption creates a powerful positive feedback loop. More companies accept hold Bitcoin. Legitimacy and utility rise. That drives more individual and institutional demand. Growing demand, fixed supply, ease upward pressure on price. Adoption, demand, price appreciation, further adoption. While price and adoption grab the headlines, it's the underlying technological development that secures Bitcoin's future. The Bitcoin network is not a static entity. It is constantly being improved by a global community of developers. One of the most important developments is the continued growth and maturity of the Lightning Network. The Lightning Network is a Layer 2 solution built on top of Bitcoin, designed to enable faster and cheaper transactions. Think of the main Bitcoin blockchain as a secure highway and the Lightning Network as a network of local roads for everyday payments like buying a coffee. The progress here has been astounding. The capacity of the Lightning Network, the amount of Bitcoin locked into its channels, has more than tripled over the past 18 months. Major exchanges, wallet providers have now fully integrated Lightning deposits and withdrawals, making it seamless for users. This solves one of the oldest criticisms of Bitcoin, that it's too slow and expensive for small daily transactions. With the Lightning Network, you can send a fraction of a cent anywhere in the world, instantly, for a negligible fee. This is not a future promise, it is a present reality that is making Bitcoin a much more practical medium of exchange. Another crucial area of development is around Taproot, a major upgrade to the Bitcoin protocol activated a few years ago. We are now seeing the fruits of that upgrade come to life. Taproot enhances privacy, Taproot enhances efficiency, particularly for complex transactions involving multiple signatures. More importantly, it has opened the door for more sophisticated smart contract capabilities on the Bitcoin network. It won't turn Bitcoin into a direct competitor to platforms like Ethereum for dApps, but it allows for more complex financial instruments and protocols to be built directly on Bitcoin's secure base layer. Finally, we cannot ignore the ongoing innovation in Bitcoin mining. The industry has become more professional, more efficient, and geographically decentralized. There's been a huge push towards green mining, with many operations now being powered by stranded natural gas, hydropower, or solar power. This not only improves the environmental profile of the network, but also makes it more resilient. So let's bring it all together. As we stand here in September 2025, the Bitcoin landscape is more dynamic and promising than ever. We've seen the price consolidate around a strong $132,500 level, after a blistering start to the year, a healthy sign that suggests the market is building a foundation for its next major move. The expert consensus, Wall Street banks, crypto-native analysts, points overwhelmingly towards significant long-term price appreciation. Some targets reach into the high six figures and beyond. This optimism is underpinned by real, tangible progress on multiple fronts, making it a compelling story for any serious investor to follow. The regulatory fog is finally lifting, particularly in the United States, providing the clarity needed for large, conservative institutions to enter the space. This de-risking event is critical to Bitcoin's path to mainstream finance. Simultaneously, adoption is accelerating. Major payment processors, luxury brands, asset managers, creating a powerful feedback loop of legitimacy and demand. Growing demand plus fixed supply ekes upward pressure on price. And beneath it all, the technology continues to evolve. The Lightning Network, solving the scalability problem. Ongoing mining improvements making the network more robust and efficient than ever before. Each of these pillars supports the overall bullish thesis. Remember, knowledge is your most powerful tool in this market. If you haven't already, subscribe to the newsletter. Get your free copy of my guide, The 5 Pillars of a $1 Million Crypto Portfolio. It breaks down how to build a resilient, profitable strategy in this exciting but volatile space. Thank you for your time, and I'll see you in the next one.